Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and it's not looking good for our markets. We've slipped more than 100 points on the Nifty. The Sensex is at the day's low. We're down close to about 400 points. The selling is picked up for our markets.
It has. So, of course, we'll discuss that in greater detail. But for now, we'll start the show with the top headlines. Mid-caps underperform large peers with most sectors flashing red. Sentiment takes a hit on strong US producer price index data and some Fed members signaling more tightening ahead.
Minda Corp acquires 15.7% stake in Precall, says it's a mere financial investment. But Precall promoters sense a threat, said they have the support of institutions. Precall's future remains the big question on investors' mind.
BEML surges after signing multiple defense and aerospace agreements at Aero India 2023. The heavy equipment maker signs 11 MOUs targeted at development as well as automation.
Ipca Labs hits a 52-week low on weak margins. Margins take a sharp hit on higher raw material prices and operating spend.
Vodafone Idea subscriber loss widens in December as it marks the 21st straight month of losses. Its user base shrinks by over 2 crore in 2022. All right, those are the headlines, but taking a look at the markets, it's a sharp fall. The selling pressure has intensified. A 120-point cut on the Nifty is what we are seeing at that 17,900 mark at the day's low. It's really supported by the Bank Nifty pressure that we are seeing, or pressurized by the Bank Nifty moves that we are seeing. At this point, 650 points gone on the Bank Nifty. It is also at the day's low, and PSU banking names, those are the ones which are putting more pressure. So that index is down by 1.8%. On the other hand, we also have some of these IT names which are lower, so the likes of TCS, we have Infosys. All these stocks are at the day's low as we speak. So selling pressure has intensified. We are seeing larger selling from the top as well. And you know, it has been a week where we saw a range-bound trading session, but overall looks like it'll end in the red.
And we're getting back into that trading range, right? Just when you thought you've broken out of it, we've gotten pegged back quite significantly. And, you know, the disappointing part of the day is that, you know, markets opened lower at 17,970, then attempted a bit of a rebound, but that's been sold into, right? Just in the first 15 minutes. And after that, consequently, progressively, we've only been ticking lower and lower, and now back at 17,900. Mid-caps have been the underperforming, you know, segment of the markets this week. Week to date, the mid-cap index is down more than 1%. So let's get a handle of what's happening in the broader markets. The advanced decline ratio is also weak at 2 in the green for 3 stocks in the red. Vivek is here with the mid-cap movers list. Vivek.
Well, thank you for that. You know, as you mentioned, you know, it's a weak session, and as you mentioned, you know, the declines are actually outpacing the advances. However, a few stocks on our radar. First on our list, ICICI Energy, very interesting name on the back of the fact that despite the fact that, you know, the auditors actually said there are some accounting irregularities, and after multiple days of hitting lower circuits, this particular stock today moved and perched at the upper circuit. Sagar Cements, after the news of acquisition of Andhra Cement today, moving higher by 6%. Supriya Life Sciences, despite very weak results, you know, the stocks a bit of a significant sell-off, but today bouncing back quite sharply. And Minda International too higher by almost 6% today, with higher volumes as well. Some of the stocks that we are highlighting on the back of very strong volume: Shilpa Medicare, last 2 trading sessions, this particular stock has moved higher on very strong volumes. We'll wait for any news on that particular name. Nelcast, TCNS Clothing yesterday actually saw a bit of a sharp sell-off after weak results, but today has bounced back very sharply. BASF today, it's been a technical breakout on this particular name. Polycab cooling off a little bit after hitting a fresh 52-week high in today's trading session. On the other hand, some of the stocks that are losing, you alluded to Ipca Labs being at a fresh 52-week low. Mahanagar Gas today moving lower and good volumes as well. And the real estate pack, some names that are seeing pressure, Lodha, that is Macrotech Developers, and Phoenix Mills as well.
Okay, so that's a long list. Thank you so much, Vivek, for getting us up to speed. We'll, of course, talk in greater detail about Shilpa Medicare as well, up 8%. But for now, let's take a look at the technicals of the markets and welcome Dharmesh Shah, who's the head technicals at ICICI Direct. Dharmesh, well, we have intensified the sell-off that we saw at the start. There was an attempt to recovery, but that has been sold into. Nifty is now at that 17,900 mark. Do you think we could see lower lows now, or this is the place where there could be more buying at the lows?
Yeah, good afternoon, Sonal. Yes, definitely. I think so. The market has been a gap down opening we have seen, and we have seen some bit of a recovery, but that has got sold off. We believe, I think so, going forward for the market, I think so we are still in the range where 17,600 is on the downside, strong support, which we expect to hold. On the higher side, again, 18,300 remains to be the stiff resistance for the market. So not so much negative, not too much bullish on the market, but expect, I think, some of a consolidation in this range of 17,600 to 18,300. But I would like to highlight 2 points here. Interesting. One is that if you look at the market for last 10 weeks, we have been making lower top, lower bottom formation on the weekly chart. I think so the current week will be the first week where we may be attempting to make higher top, higher bottom formation on the weekly basis. So I think so this is what is.
Okay, we've lost that connection with Dharmesh. He was giving us the index view. But for the markets, let's quickly run you through which are some of the big losers today. As we said, the Nifty is now at 17,900. It's a 130-point knock. Banks are underperforming today. The Nifty Bank is down 1.6% with a 700-point cut. We're back with, we've reconnected with Dharmesh. Dharmesh, you were telling us?
Yeah, so sorry, there was some technical error. But what I was saying that the higher top, higher bottom formation on the weekly chart is something the first sign of some bit of a bottoming formation for the market. And second is the advanced decline ratio. If you look at the advanced decline ratio, it has improved from 0.9 to 1.2. It was 0.9 in January. In February, we are at 1.2. So things are improving. Maybe I think so some bit of a 18,000 a psychological level and a stiff resistance. We will see some bit of a selling pressure in the near term. But eventually we expect, I think so, market to see higher. So bias remains positive. Maybe a couple of days, some bit of a breather cannot be ruled out. But 17,600 we don't expect to breach. At the same time, we believe, I think so, Nifty should gradually move towards 18,300. So buy the dip should be the strategy going forward.
Why the dip is the strategy going forward. Dharmesh, thank you so much for joining us today with those technical trades and the outlook going forward as well. We'll slip into a short break now, and up next we'll be joined by Dinesh Nolka, who's the MD at Nitin Spinners, to discuss the Q3 performance and most importantly the outlook going forward. Stay tuned for that. Welcome back. As promised, let's get a corporate conversation going now. Nitin Spinners is on our radar today. The company reported its earnings earlier this month and posted revenue growth amid what was a challenging quarter for the textile maker. Margins too were steady on a sequential basis. Now, given the correction in cotton prices, the YOY numbers are not fair to compare them that way. The company's managing director, Dinesh Nolka, is joining us now to discuss the earnings outlook and the business outlook as well. Mr. Nolka, good afternoon. Thank you so much for joining us here on CNBC-TV18. Well, you know, Q3 was, of course, a challenging quarter in terms of how the raw material prices also panned out. Can you tell us what is Q4 looking like in terms of cotton prices and improvement in all the three segments as well? Because I see it from your numbers, knitted fabric continued to see a decline. What is the outlook going forward?
Good afternoon, Sonal. Thank you for having me on the show. So as far as cotton is concerned, we are seeing quite a stable cotton prices since last 2 months. The cotton has been stable around 62,000 rupees a candy, plus minus 2-3%, which is a welcome change since last year was a very volatile year where we saw plus minus 30% kind of changes. So that way cotton prices have stabilized, but still they are higher than the international market, relatively higher by about 10 to 12%. As far as our business segments are concerned, as Nitin Spinners is concerned, our operations for the spinning yarn is going now at full stream. We are running our full capacities. Also, our weaving and fabric processing also is running at full capacities. Knitting still is down, and we are seeing it is better than last quarter, but still we have to pick up to the normalized levels in that segment.
So how much better is knitted fabrics in Q4? How much better is it expected to be in Q4 versus Q3? And how much do you fall short compared to normalized levels? And what would the inventory that you are sitting on be for knitted fabrics?
Knitted fabrics we generally make off on the pre-sold basis only. So we are not having inventories as such for the knitted fabric. But knitted fabric normally operates at a capacity utilization of about 70%. And last quarter, we were running only at about 26-27%. Now we are reaching about 40% levels in that segment. But that is a very small segment if we compare it to the total revenue of our company. That is only about 6-7% of the total revenue of the company.
Yes.
Okay. So there is an improvement in knitted fabric. Of course, you say still subdued from the normalized levels. In that case, whatever you told us, earlier you were expecting a 4 to 5% growth in FY23. Now that we are almost done with Q4 as well, will you be able to hold on to that guidance or you will fall short of that? Also in terms of margins, 16 to 18% margin band is what you had told us earlier. What does this year and the next year also look like?
Yeah, first of all, on margin front, margin is like 16 to 18% was a normalized margin I have been always insisting on. So this year we had seen a lot of challenges on the side of the raw material side and also on the price volatility side. Plus the demand was also very 11% for this particular year. Now that is still running at those levels only. So definitely we fall short of the margins. On the revenue side, we have seen a major deflation in the cotton prices and accordingly in the yarn prices as well. If you see from the average peak prices, the cotton has come down by about 35 to 40%. And accordingly, and also some production stoppages were there during this current year. So definitely will not be able to reach that 5% growth levels. In fact, we will be about 5 to 7% short of last year's top line.
You have plans to expand your capacity in the next 12 months. I think you're planning to expand your capacity across the various segments by 30 to 50% with an investment of 950 crore. Is that on track? And could you give us some more clarity on when it comes on stream exactly? How much does it boost your revenues and how you will be funding this capex? Any change in your plans?
There is no change in the plan. The expansion is going as per schedule. This expansion is already being funded by the internal accruals and the debt that has already been tied up completely. First, we have 3 phases of our project, wherein first phase of our value addition, that is woven fabrics plus knitted fabrics, is going to be on stream by end of this quarter or early maybe March or April. We will be able to commission that project. In the spinning side, we have 2 locations where the spinning is coming in. So part of it will be in the second quarter, June, July of the next coming year, and the rest will be by September, October. We are on track, and it is there is no changes on our expansion plans.
Okay, so no change in expansion plans. Last question before we let you go. We've been speaking to a lot of companies and they speak about this major decline in export demand. You also have a substantial chunk coming in from there. It was under pressure. Are you seeing any improvement and you expect this pressure to continue for coming quarters?
Normally, if you see our past reports, we have been exporting about 65% of our total revenue. In the last 6 months, it has fallen down to 50%. So definitely there was a lot of challenge on that side. But now again, we are seeing some improvements in the overall sentiments. Already when the prices were going down, a lot of the end users as well as the retail brands stopped their purchasing. And accordingly, that has affected the revenue basically on the export side. Now that is the inventories in most of the European brands as well as US brands is normalized and they are back to the buying time. So I think this should, going forward in another 4 to 6 months time, we should see a normalized level of exports.
Dinesh, we'll leave it at that. Thank you very much for joining in. That's Nitin Spinners for you. Need to slip into a short break. We'll come back with more on individual stocks. We'll also get our Midcap Spotlight stock for you. Welcome back. This is our segment, Midcap Spotlight, and today we're not talking about a stock, we're talking about the entire cement sector. Nigel is here to tell us why it's in the spotlight. Nigel.
Well, there are different pieces of news that are playing out, so let's focus on the stock-specific news first. UltraTech Cement, they've gone ahead and they've expanded capacity more than 1 million tons in Chhattisgarh and close to around 3 million tons in Odisha. That takes the total capacity to around 127 million tons, which is pretty good going. And they're on the way to become that 150 million ton target that they had announced a couple of months ago. Sagar Cement, that's the other one in focus. That's doing relatively better in today's trading session. Their Andhra Cement acquisition, well, that's got completed. Remember, Sagar Cement had a capacity of around 8.25 million tons odd. Now, adding this capacity, 2.6 cement as well as clinker of around 1.7, which means it's backward integrated, and the plant is currently shut down. They achieved that target of more than 10 million tons on. Now, Sagar Cement says that by the first quarter of FY24, they're going to get this unit up and running, which is quite encouraging. Why is this acquisition lucrative? Well, it's taking them to more than 10 million tons. And keep in mind, they've also announced another 1 million tons that they'll be adding. So effectively, they're going to be moving to close to around 11 million ton capacity by 2025. The acquisition cost as well is attractive at around $56 per ton, which compares with around $100 per ton when you want to set up a greenfield capacity. Moving to the cement price increases, which is positive for the entire sector. Dam Capital, they have come out of the north. They say that there have been various attempts to increase prices. And for February 2023, they are saying that price increases have been there to the effect of around 3 to around 5 rupees in north as well as central India. In west and east, it's by around 5 to around 10 rupees. And in south, they highlight that it's up by 15 to around 20 rupees. But only 10 rupees has been accepted as of now. So let's see whether or not the other 10 rupees can get absorbed. What is more encouraging is they understand that there are more price hikes in stores, whether it's in south, west, east, as well as central. The reason for the hikes is to tackle the higher input costs, and also demand has been rather strong on ground. Moving to Incred's note, then they say that cement prices, well, prior to this increase, were more or less flattish in Q4 in comparison to Q3. But because of these price increases getting absorbed as well as operating leverage playing out, they're saying that the EBITDA per ton will improve. Remember, it was up 180 rupees on an average in Q3 in comparison to Q2, and they're working with a further improvement. Finally, there was some buzz that there could be a potential GST, cut on cement from around 28% to around 18% odd. But we understand from sources that tomorrow that's not unlikely to be taken up. So it could happen, but at least as of tomorrow, it's not in the GST agenda. So all these three factors playing out. One is stock specific, the second one is in terms of pricing, and GST. That's the hope. In the coming weeks, we'll see some action on that front. Back to you guys.
Okay, thank you so much, Najil, for making sense of the moves that we're seeing in the cement pack. Moving on to the big story, CNBC-TV18 News Break is confirmed. Minda Corp has acquired 15.7% stake in Precall. Remember, my colleague Nimisha had alerted of a potential corporate development in Precall. He's joining us now with all the details. Nimish.
As you rightly pointed out, there is an official communication from Minda Corp that they've managed to acquire 15.7% from the institutional investors in Precall, and they're investing 400 crores. So that's a confirmation now. Now the next thing to track would be what next step for Minda and for Precall. If indeed Minda reaches out to the Precall management and asks for a buyout, then things will look very different. Then it will trigger an open offer as well. So again, this is all realms of speculation. We need to see what's the next step. Officially, though, Minda has confirmed that they've taken 15.7%, but it's a financial investment, and they're looking at like all the shareholders, they're looking for normal shareholder rights. But investing 400 crores in a rival company means that there is some intent of looking for some synergies as well. So that's something to track going forward. I believe the Minda management is going to speak to their investors as well. So that will be very important to track as to what communication they do to their investors. Now, if you look at the shareholding pattern of both Precall and Minda Corp, there is one single investor, which is a private equity investor who owns stake in both these companies. So my understanding is that investor's role will be very crucial for the road ahead. So that's something to see. Also, while the Minda has announced that they've acquired 15.7%, I guess the disclosures in the evening will be very important on who are the funds that have already participated and given the stake in favor of Minda Corp. If you look at the shareholding pattern of Precall, only 36% is with the promoters, 4% is with mutual funds, 12% is with FIIs, and 10% is with the two private equity investors. So 26% is the large chunk float from which this 15 would have come from. So the disclosure will be important. The next step, what Minda does, will be important. But I guess this is a developing story and one needs to track on. But in a significant development, Minda Corp has today acquired 15.7% in rival company Precall.
All right, Nimish, thank you so much for joining us with all those details. Let's talk about more buzzing stocks. This was about Minda and Precall. Shilpa Medicare is buzzing in trade today. Company's Bengaluru facility has registered with Ministry of Health UAE. What does it mean for the stock, and what is the outlook? Ekta is joining us with more details on this. Ekta?
Hi, thanks for that. Well, yes, Shilpa Medicare is in focus because it did come out with its numbers a couple of days ago, but it did come out with a press release last evening indicating that the company's Bengaluru facility has been registered with the Ministry of Health in UAE. This facility is basically used to manufacture oro-dispersible films as well as transdermal systems. So it's a different way of taking a medicine. For example, it disperses on your tongue, or it's a patch which you can put on your skin and then the medicine gets absorbed. Now the company will be able to register products in the UAE for commercialization post this. They will use, the facility will be used to manufacture and test specialized dosage forms as well. And this particular plant has also received the go-ahead from the UK MHRA. They've registered with the US FDA Food Facility Registry and are looking at dietary supplement supply to the US markets as well. I was also listening to their conference call which took place a couple of days ago. Just wanted to add that they have completed 2 product plant validations when it comes to the peptide business. They're sounding very confident on CDMO, and for the Jadcherla unit, which has an import alert, they did receive the Health Canada go ahead just some time ago. So they're hoping for a re-inspection by the US FDA. They are looking at innovation in products. Though there is some concern about, the way the stock has corrected, they are also looking at monetization when it comes to their API segment. So that would be something maybe the stock would probably, or investors would probably keep on their radar.
Interesting. Thank you very much for that. Oro-dispersible films. Let's get into a break on that note. On the other side, your stock. Stay tuned.